There is a room in Basel, Switzerland. It meets every 2 months. No press is allowed inside. No minutes are published. The governors of the world's most powerful central banks sit around a table and discuss the architecture of global money. In November 2023, the representatives of China, the UAE, Thailand, and Hong Kong walked out of that room with something that most financial journalists did not understand. They had just declared the mBridge project operational, not theoretical, not a pilot, operational. And if you understand what that actually means, not what the headline said it means, not what the headline said it means, but what the structural reality of it means, then everything you thought you knew about dollar dominance needs to be rebuilt from the ground up. Most analysts are looking at trade share percentages. They are looking at the wrong thing entirely. The thing they are missing, that is what today's class is about. I want to show you how I reached this conclusion. Not the conclusion itself, the path, because the path is where the real information lives. And the path does not begin last year. It does not begin with the sanctions on Russia. To understand what is happening right now, you have to dig down through the layers in the right order. Because when you do, you find something that changes everything. The first layer is the one everyone sees. The dollar is 80% of global trade. The dollar is the reserve currency. There is no alternative. These are facts, and I am not disputing them. But here is what I want you to hold on to. In 1944, the British pound sterling was the world's dominant reserve currency. It had been for over a century. In 1944, Britain still had an empire. By 1956, the Suez Crisis ended, not because Britain lost a military battle. It ended because the United States threatened to sell its holdings of British pounds and destroy the sterling overnight. The pound did not die in a crash. It died in a negotiation. Hold that mechanism. The dollar is not going to crash. I want to be precise about this. What is being built right now is not a crash. It is a bypass, and bypasses do not announce themselves. They are simply there one day, and the old road becomes less traveled, and then one morning the old road is a memory. China's treasury holdings have fallen from $1, 10 cents trillion, to approximately $770 billion, a drop of nearly $330 billion in under a decade. That money did not disappear. It was converted into physical gold, converted into strategic commodities, converted into the infrastructure of a parallel system. That is the exit, and it has already begun. Now I need to show you the player that no one is writing about, because every analysis you will read focuses on China versus the United States. That framing is incomplete. The pivot player in this entire situation is not Beijing, and it is not Washington. It is Riyadh. I am going to build this case in the order I discovered it, because the order matters. In 2023, China settled its first liquefied natural gas trade with the UAE entirely in yuan, not dollars, yuan. This was not a symbolic gesture. LNG is one of the most dollar-dependent commodity markets on Earth. The infrastructure for settling energy in dollars is decades old. For China and the UAE to settle in yuan, they needed an entirely different set of pipes, different clearing, different settlement, different counterparty risk management. They used mBridge, and it worked in real time in seconds, without a single US correspondent bank touching the transaction. Now here is why Riyadh is the pivot. Saudi Arabia supplies roughly 17% of China's oil imports. Saudi Arabia joined BRICS as an observer in 2024. Saudi Arabia also joined BRICS Plus alongside Iran, UAE, Egypt, and Ethiopia, creating for the first time a bloc where the world's largest energy exporters and the world's largest energy importer sit at the same table with their own financial plumbing outside the dollar system. If Saudi Arabia moves even 15% of its oil settlement to yuan, not 50%, not all of it, just 15%, the petrodollar architecture that has governed global energy markets since 1974 begins to structurally fracture, not collapse, fracture. The fracture is the story. The third player is Wall Street. And this is the part one find most structurally interesting. because Wall Street did not intend to build China's parallel system. It was pursuing quarterly returns. Between 1990 and 2020, American corporations moved manufacturing to China at a scale that is almost incomprehensible in retrospect. They were chasing 20% higher margins. What they transferred in the process was not just production capacity. They transferred industrial knowledge, logistics infrastructure, supply chain relationships, and the technical workforce that operates all of it. By the time Washington understood what had happened, China had the industrial base required to build a post-dollar world. The adversary was funded by the system it is now replacing. That is not a political argument, that is game theory, and it is the most important structural fact in this entire analysis. That is the problem, and it is not solvable, it is only manageable. The question is who manages it and who gets managed by it. One more thing before we go further. The BRICS plus expansion brought in countries that collectively represent a resource base the original Bretton Woods architects never had to account for. Iran's oil, Ethiopia's agricultural scale, Egypt's Suez positioning, UAE's sovereign wealth. These are not symbolic memberships. They are the physical inputs for a closed-loop trade system. A system where you can buy energy, food, and manufactured goods entirely within one block, settled in local currencies, cleared through mBridge, without the dollar touching a single transaction. I want to make 4 arguments now. Each one is individually significant. Together, they are a structural indictment of the assumption that dollar dominance is stable. The first argument is about scale. China's gold reserves have grown for 18 consecutive months as of the time of this recording. 18 consecutive months. The People's Bank of China has been the single largest institutional buyer of gold on earth during that period. In the same window, China reduced US Treasury holdings by over $300 billion. This is not portfolio rebalancing. This is a deliberate, announced, publicly documented exit from dollar-denominated assets into hard assets. The scale of this shift applied across the entire global south. Because China is not doing this alone, central banks from Poland to India to Singapore have been net buyers of gold for 3 consecutive years, represents the largest reorientation of global reserve assets since the end of the Bretton Woods system in 1971. The second argument is about acceleration. In 2015, the yuan was used in approximately 2% of global trade settlements. As of 2024, that figure has risen to over 4.5%. That sounds modest, but the rate of change is not modest. It doubled in under a decade, and the conditions that drove that doubling, sanctions pressure, BRICS infrastructure, BRICS plus expansion, petro-yuan deals, all of those conditions are intensifying, not fading. The trajectory, held constant, reaches 10% within 5 years. At 10%, the dollar's structural dominance is in genuine question for the first time since 1944. The third argument is the one most analysts miss entirely. Read this carefully. The US dollar's primary power is not its trade share. Its primary power is the veto. The ability to cut any country, any bank, any institution off from the SWIFT system and therefore from dollar clearing, is the most potent financial weapon ever constructed. It ended Iran's economy. It froze Russia's reserves. It is the reason every country on earth has, for decades, maintained dollar reserves regardless of whether they wanted to. But here is the structural fact that breaks the consensus. SWIFT is a messaging system. It tells banks what to do, but it still requires correspondent banks to actually settle transactions, and those banks settle in dollars through New York. mBridge is not a messaging system. mBridge is a settlement system. It is the correspondent bank. It settles peer-to-peer, central bank to central bank, in local currencies, in real time, with no US intermediary. The veto requires the pipes to run through New York. mBridge builds new pipes. When the pipes do not run through New York, the veto does not exist. Let me be precise about what that means. The United States has spent 70 years constructing a financial architecture where dollar dependency is self-reinforcing. Every country needs dollars to buy oil. Every country needs SWIFT to clear dollars. Every country therefore maintains dollar reserves and dollar-denominated assets to remain within the system. mBridge breaks that loop at the settlement layer, not the messaging layer. Not the trade layer, the settlement layer. Once that loop is broken for enough transactions, the self-reinforcing mechanism reverses. And reversals of self-reinforcing mechanisms do not happen gradually. They happen suddenly. The fourth argument is the point of no return. The question is not whether China will complete this parallel system. My analysis shows it already has, at minimum viable scale. The question is whether the United States can construct a counter-architecture before that minimum viable scale becomes the dominant scale. And here is the structural reality. The US response to every challenge to dollar dominance has been to raise interest rates, increase sanctions pressure, and reassert SWIFT dependency. Those tools work against countries that have no alternative. They do not work against countries that have built their own pipes. Every sanction the US applies to a BRICS Plus member country now accelerates adoption of mBridge among the other members. The medicine is feeding the disease. Now I need to show you something most analysts completely miss, because all four of those arguments point toward the same mechanism. And that mechanism has a name. It is called the liquidity trap. Not in the Keynesian sense, but in the geopolitical sense. The more the US defends dollar dominance through financial coercion, the more countries are incentivized to build exit infrastructure. The more exit infrastructure gets built, the more the coercion loses its bite. The more the coercion loses its bite, the more aggressively it gets applied. The trap is closed, and Washington is inside it. Everything I just showed you, most analysts use that information to predict a dollar crash in the next 2 to 3 years. I believe they are wrong. Here is why. The crash scenario assumes a single moment of rupture. A day the dollar dies. A layman-style event that crystallizes the transition into one visible catastrophe. My analysis shows the transition is already structured to avoid that moment. Not because China is being cautious, but because a dollar crash destroys the value of China's remaining $770 billion in treasury holdings, its export revenues, and its own financial system stability. China does not want a crash. China wants a migration, and migrations do not crash. They drain. In the 6-month horizon, watch for one specific signal. Saudi Arabia's next major energy contract with China. If that contract is settled in yuan fully, not partially, it will be the first time a G20 energy supplier has formally moved outside the petrodollar for a major bilateral deal. That is the observable tripwire, not the headline, the contract structure. In the 18-month horizon, watch mBridge's membership list. Every new central bank that joins as a full participant, not an observer, a full participant, represents another node in the parallel settlement network. The network becomes self-sustaining when it can clear energy, food, and manufactured goods internally. My analysis shows that threshold is approximately 12 to 14 full central bank participants. They are currently at 5. The pace of expansion will tell you whether 2026 or 2028 is the inflection point. In the 5-year horizon, the dominant scenario is this. The dollar remains the world's largest single reserve currency, but it is no longer the only architecture. A significant portion of global South trade, I believe between 20 and 30%, settles through the parallel system. The US retains dollar primacy within its alliance network. China retains yuan primacy within BRICS Plus. The world does not have one financial operating system, it has 2. And the country that controls the energy resources that determines which system grows faster. I was going to end the prediction there, but there is one more thing I need to show you. Because without it, the previous prediction is incomplete. The United States federal debt is currently above $34 trillion. At current interest rates, the annual interest payment on that debt exceeds $1 trillion per year. The dollar's reserve status has for decades allowed the US to finance that debt at rates no other country could achieve, because every country on earth needed to hold dollar assets. If the parallel system captures 25% of global reserve demand, the US loses a structural subsidy worth hundreds of billions of dollars annually in financing costs. That does not cause a crash. It causes a slow compounding deterioration of fiscal capacity. And slow compounding deteriorations are the hardest things for democracies to respond to. Once you see that mechanism, you cannot unsee it. The question now is, what does a rational actor do with this information? I used to believe the yuan could not challenge the dollar because China's capital account is closed. You cannot freely move money in and out of China, which means the yuan cannot function as a true global reserve currency. I believed this until I understood what mBridge actually does. mBridge does not require a fully open capital account. It operates central bank to central bank. The settlement happens at the sovereign level, not the private investor level. China does not need a fully open capital account to run a parallel settlement system. It needs sovereign counterparties willing to transact. It has them. I am confident that this objection, while structurally sound in a traditional framework, does not apply to the specific architecture China has built. I used to believe the BRICS bloc was too economically incoherent to function as a trading bloc. The GDP disparities, the political disagreements, the lack of institutional depth, I believe these were fatal flaws. I believe that until I looked at what the bloc actually needs to do, it does not need to be the European Union. It does not need deep institutional integration. It needs to provide enough alternative clearing infrastructure that its members are not entirely dependent on the dollar system for trade settlement. That is a much lower bar, and mBridge clears it. The third objection is the one I receive most often, and it is the most personal. Someone watching this class will ask, what does this mean for my savings, my pension, my dollar-denominated assets? The specific answer is this. Watch the 6-month signal I described, the Saudi energy contract. If that contract settles in yuan, reduce your exposure to long-duration US Treasuries, not because the dollar is collapsing, because the structural subsidy that has kept US borrowing costs artificially low is beginning to erode. Long-duration treasuries are the most exposed asset to that specific erosion. That is the signal. That is the decision framework. Use it. Most people draw the wrong historical parallel here. They compare the dollar's situation to the British pound after World War II, a sudden loss of dominance driven by military and economic exhaustion. The correct comparison is not the pound. The correct comparison is the Spanish Empire in the late 16th century. Spain controlled the world's silver supply. Silver was the global reserve asset. Spanish pieces of eight were the dollar of their age, accepted everywhere, trusted universally, the foundation of global trade. Spain did not lose that dominance in a war. Spain lost it because the Dutch and the English built alternative trading networks. Networks that moved goods, settled debts, and priced commodities without Spanish silver at the center. By the time Spain understood what had happened, the architecture had already migrated. The silver still existed. Spain still had it, but the world had stopped organizing itself around it. China is not trying to defeat the dollar in open combat. It is building the Dutch trading network. The mBridge is the Dutch East India Company's clearinghouse. The BRICS plus resource loop is the alternative supply chain. The petro-yuan is the guilder. The dollar will not die. It will be bypassed. And the bypass is already operational at minimum viable scale. Washington is building a faster horse. Beijing is building the railroad. That is my analysis for today. Remember, this is not prophecy. This is game theory and structural history. If I am wrong, we will come back and find out why. That is what this class is about.